Hello traders, this is my evening video. I worked today, so I was not uh, trading markets actively. Um, but I did want to point out, I was looking at some of my charts and stuff. We're going into the big Fed meeting tomorrow, and all kinds of risk uh, that the Fed can save the world economies going into 2019. Something that I was really wanting to show here. You notice right here, right now, this is my yearly chart. We're coming crashing down to this trend line, and we closed there as of today on this trend line. Back in 2007, we closed a little bit lower, back down on XLF. It was 22.79, so about another dollar, $1.10 lower was low in 2007 before the big crash in 2008. And if this doesn't get you guys worried, I mean, I don't know what will. But uh, this is something to really be concerned about. That we're doing a situation like this, and here we are. Come Friday, we're going to be shutting the government down. It sounds like, or I think it's this Friday. But yeah, it's not good. Not a good situation at all. So just wanted to point that one out. That's the main thing going into the Fed tomorrow. Wondering if they're going to play politics and really try to implode Trump's markets, because there's a high bar for Powell going into the meeting tomorrow, and I just don't know if he's going to be able to pull it out. And I think the biggest problem that it's not necessarily the rate hikes, it's the balance sheet. They need to come out tomorrow and say they are suspending the reducing the balance sheet for the near term for the markets to stabilize, because this is causing a serious liquidity issue in the high yield bonds, a serious liquidity issue. This is a chart I wanted to show you guys. A friend of mine, Key Trade, he has customized Ichimoku that he designed himself, and he has been nailing this market. And we are right here at the bottom of the cloud going into the Fed meeting tomorrow. And bottom line is, they need to suspend the uh, balance sheet, reducing their balance sheet for the near term, 3 months, 6 months. I don't know how long. But if they were to do that, I think that would turn the markets around. And everybody and their brothers talking about interest rates, and I honestly think the interest rates are, if they don't do the interest rate hikes, it's going to put a lot of fear in the markets. So they actually need to stay the course more so on the interest rates, and they need to, on the balance sheet side, add liquidity to the high yield bond arena to stimulate the markets, in my opinion. And so if they come out here and they start cutting rates, I just think it's going to be all over with, and we're going to have one heck of a beginning of 2019. In the same tone here, everybody and their brothers running for the 2 year. They've been accumulating the 2 year, and the flight to safety and the shorter dated securities. And as of right now, for a short time there, we had an inverted yield curve right here. And now the 5 year and the 2 year are pretty much trending down the same. This is all going to change tomorrow. I don't know which way it's going to change. But once this 2 year starts going over the 10 year, we're in full blown depression. And we do not need a situation like that. And and I think uh, them not raising rates is the absolute worst thing that the Fed possibly can do. They have to raise the rates to December, and maybe come out and say we're only going to have 2 rate hikes next year. Okay, so, and if they did that, in my opinion, that might stabilize these yields. But right now, the markets are on a sell signal. And I don't know if anything they do tomorrow can save these markets because there are all the charts are broken. I mean, it's amazing all the charts that are broken out there, and it to get buyers to step back in right here, right now. It's going to be a hard case, you know. And the Fang names were the ones that took us up, and whenever these earnings that came out this past quarter were quite disappointing. And there comes a point whenever valuations are so high that you know traders really start looking. They have to come out with higher and higher earnings, and virtually none of the fangs actually came out with the numbers that they needed uh, last quarter. And actually, the one Google was the one that, of all of them that actually had the best numbers of them all, and it's one of the ones performing the worst. So figure that one out. Now, Micron came out after hours, and they're selling off really hard. And this is one of the critical semiconductor stocks. And as you can see on this trend line right here, so the SMH is has broken the uptrend on the yearly. Okay, and you can see that better on the weekly chart here. But and we are inside last year's value, where some of the charts are still holding at or above last year's value. Your semiconductors are not. They've already given up into last year's value areas. And if you go back down on your weekly here, you can see what I'm talking about. We broke back on in October on the semiconductors, and we just like this is basically a bear flag. That's all it is. And now with Micron coming out the way it is with this real small candle for the week, uh, it's really scary where these markets are headed next. Because and we're hearing bad reports on semiconductors out of South Korea, out of bad reports out of China semiconductors, and I keep waiting for the news to hit. Oh yeah, we also had bad news out of Japan on semiconductors, and I keep waiting for the news to hit Indonesia too. Basically, the semiconductors they've got way too much supply out there, and it's going to take a while to work off this demand, and so yeah, an extremely bad situation here for your semis, and that is a backbone for your tech stocks. Your transports. This is the backbone for your industrials, and it actually started breaking down faster than your semis. And look at this, we've almost totally engulfed last year's entire value for your transports already, going into FOMC tomorrow. Okay, typically whenever you give up to 61.8, you're going to get the full retracement. So that puts it down to 163.15. And I don't know if any of you saw FedEx's numbers, and they are a major component in your transports. And FedEx came out there with guidance that was just horrible. And they were trading down $11 at one point in the after hour session tonight. So very bad for our transports. And this is the backbone for our industrials. Very dangerous situation that setting up here for both the industrials and our uh, technology stocks. And if you go on your weekly here, you can tell right here on September 17th. That's whenever things started, or September 18th, actually, whenever September 24th, the week of September 24th. That's when everything started to break to take the big slide. And once we got below the 50-day moving average, we did our retest, and now we just continue to fade lower here. So transports aren't looking very pretty either, especially after those FedEx numbers came out. Yeah, after hours numbers or charts like this, these will not hold up the markets. So right now the futures are positive, and I have no idea with FedEx and Micron both trading lower. I have no idea why they're actually up in the after hour sessions. Yeah, right here it's showing the Dow is marking 134 points up right now at 11:30 at night, and it's despite having the very bad news on the earnings front. And your Nasdaq's 35 points, and your ES is at 15. I just got a bad feeling that going into FOMC that this is all going to be back to zero, or back to break even or whatever, and then we crash and burn after the FOMC if he does not reduce or stop the reduction in the balance sheet. I mean, that's absolutely crucial, and there is nobody on Bloomberg, nobody on CNBC, absolutely nobody talking about the trouble the Fed reducing the balance sheet is causing the liquidity squeeze in the high yield bonds. And that is the backbone of the problem, in my opinion, of this massive market implosion. If the Fed is smart and does what our economy actually needs done, and instead of being political and possibly destroying Trump's legacy, and I don't know the simple fact that Powell came out 4 weeks before the election and gave that speech that he gave, it just screams to me political to me. So I'm hoping that's not the case, and he comes out and he does the right thing here. Well, here's the dollar, and the dollar is at a very high range high here. And if he does what I think, what we need him to do, and stop the reduction of the balance sheet, and possibly just go to two rate hikes next year. If he does all that, that should bring the dollar back in, which would be bullish for U.S. equities, in my opinion. That will drive crude higher, the commodity space. That will it will support the commodities, give supporting evidence to the commodity space, and uh, and crude. Yeah, especially crude. Crude is a major component of the markets, and so if we bring this in, that's probably going to be very good for gold. And I told people last week, and the first of this week that I thought gold was ready to take off, and it is doing just that. XAU. As you can see here, the gold is just all week long. It just keeps on climbing here, and it is on a nice little trajectory. And this is despite the fact that the dollar is at all-time highs. Look at this move in gold here with the dollar extremely strong here. So you typically, when the dollar is weakening, people hedge the weakening dollar with gold. So just keep that one in mind here. Uh, I do think there's a pretty good chance that we could run back up here to the 1345 areas, and the cloud, the 1285 area first of all. On our gold, I think we are about to begin a very strong bullish time for gold. I think there's a pretty good chance that the next thing we see falling, and that's the Dow components. We started seeing a little bit of selling in McDonald's, and we have not seen that for several weeks here. And so one of the things you better be concerned about going into the new year, I do not think you should be in the Dow Jones at all, period, unless you're going to be short. I think there's way too many Dow components that are overpriced here that need to reset. McDonald's being one of them. Boeing being the biggest one that needs to be reset. It hasn't really came in at all on this correction. And I do think that's going to be part of the second wave down in this market if we do get it. The Dow components will probably be leading to charge to the downside. So just keep that in mind. You got your Boeing, you got your Intel, which is probably going to start selling off tomorrow. It's going to be coming in. If my theory is correct, and but I do think Dow is going to be under extreme pressure uh, first of next year, and even stocks like IBM, it's right at support right now, and it wouldn't take much to get it starting to break. And if we start seeing, it's a computer component. It looks like we're at a range lows, but it has been at these areas before. I mean, go back all the way back here to. You have to go all the way back to. We're at a range support area, and these are fib fans that I use, and we're right down here at this range support area, and it could easily start breaking pretty quick here. And if you notice there, it got down to $75 a share, and it's 116 right now. And IBM is old technology, so just remember that it's old tech. That's not really what I wanted to do. Okay. Another one, Dow component, Cisco. If the techs start to fall, Cisco's going to go with it, and I firmly believe that's what we're about to do. We're about to. You see right here, we're putting in a topping pattern. Potentially putting a topping pattern right here. Yeah, just look at Cisco here on your yearly chart. It's poked out and above the primary uptrend, and it's one of the stocks that's still holding up above the primary uptrend. So I think there's, if we have continued weakness in this market, this is a prime candidate for reversion lower, in my opinion. And if you come in here on your weekly, you see what's going on here? We are right on that uptrend line that I mentioned. It didn't really give it justice on the yearly chart. But here I go down to the weekly. Look where we're at. We're probably going to be starting the year breaking down in Cisco, if not sooner. And here we are going into the thing tomorrow. So just something to keep on watch here, that there is all kinds of risks that these markets are about to have a significant move lower. And I just wanted to point that out. Oh, I wanted to show you guys the VIX real quick. We have absolute total fear going on here going into the Fed tomorrow. At 24, we're talking a 2% expected move in the S&Ps, okay? And we're above that. So we're probably about a 2.25% expected move tomorrow, depending on what the Fed actually comes out with and does. So they are really jacking the option premium right now, and that's what the VIX measures. All kinds of fear that things are just all going to fall apart tomorrow. And to give confirmation of how much fear is going on, the VXX, that's more of a 90-day measure on volatility, and you notice that it's already breaking out from the prior highs, and we're putting in higher highs on the VXX here to get that gives you the confirmation that there is all kinds of fear hitting this market on extremely elevated volume. Okay, and I think we all realize that from just watching the markets every day. Losing 500 points on the Dow every day, it gets a little old after a while. But this is probably just the beginning, because we have serious problems in the global markets. We have the Nikkei, which is a Japanese index. It's barely holding on to its levels. Okay, barely. Let me. I would like to show you that, but it's barely holding up. And I think the only reason it held up till today, they had a SoftBank IPO hitting their markets, and I think they were trying to keep their markets up for the big IPO. It's the biggest IPO they ever had in Japan, and it hit today, and SoftBank's trading down 10% from the open. Very bad IPO for the day. Okay, and So far, the Nikkei's holding in there. I think they're waiting for the Fed tomorrow for everything just to fall apart. And then you have the Hang Seng. That's the Hong Kong market. It's ready. It's a bear flag pattern. It's ready to break down. Okay. And then the DAX, it's already broken down and it has room to go. So all kinds of reasons to think that the global markets are going to liquidate after the Fed speak, unless he pulls something out of his hat that really impresses investors. Okay, I know it's a little bit longer than normal, but I think the importance of this meeting tomorrow warranted a few extra minutes discussion to tell you if you shouldn't even be long this market for a couple days after the Fed because everything's broken, and at least let things settle out a little bit because they're so broken right now that you know it's just going to be bear market rallies. There's going to be bears sitting there waiting to buy levels, and it's going to be extremely difficult to make any headway in your long trades, at least here in the short term. Hey, that's all I got to say. Good luck, and that's all. Try to make money together.